All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me, as always, is my good friend, Mr. Peter O'Malley. Peter, hello.
Hi, Ciaran. Great to see you.
Great to see you again, Peter. Welcome back for another week. It has been a pretty eventful week, to be honest. I want to start today's episode just quickly recapping on what's happened in the US. Obviously, we spoke last episode before the election, before the Melbourne Cup. There was a few things happening, and obviously we are now catching up afterwards. I really love to get your thoughts about, what's going to happen now for Sydney and for Australia's economy and property more broadly, now that Trump has quite resoundingly, won in the US election.
Well, Trump policies won't help Australia because they're going to impose tariffs on China if Trump executes the policies that he campaigned on. But we know politicians of all persuasions tend to take a harder view in the campaign than they do in reality, and pragmatism tends to return once they've won their victory, as Trump has in this instance. So I think it's a wait and see. Trump doesn't take power until January. Markets will be choppy as people place bets about what a Trump presidency really means and what his relationship with China will be. So from a security perspective, Australia will try to stay involved with the US, you would suspect, and get closer. And it'll be up to Ambassador Rudd to charm his way into to Donald's world. Economically, though, Australia will be hoping that his tariffs are not too tough on China, because it will flow directly onto us here in Australia. So we've all got to wait and see. I think more immediately for the Sydney property market, it's what the RBA are doing, which is nothing. They're holding. So, but what they are saying in their in their RBA statement from Melbourne Cup Day was pretty tough. I just read it before this recording, Ciaran, and the RBA's dialogue after Tuesday's rate decision was actually much tougher than it has been in previous months.
We will certainly come to the RBA statement in a minute. There's a couple of things I just very quickly want to stick on with the US election, but we certainly won't linger. On the election day in Australia, when the votes have been counted and it looked clear that Trump was going to win, there seemed to be a hell of a lot of activity in the money markets, surging in many cases with, the economy looking to really surge off the back of this result. Do you think that even though he doesn't take office till January, is there likely to be a local impact in the 2 months or so until then, as the economy in many ways kind of tries to predict what his policies may actually end up being when he is, in office?
That'll come down, you'd have to think, that'll come down to his appointments, the statements made by his appointments. That'll become more apparent after over the next 2 to 4 weeks, you would think. There's a lot of money that changed hands, and there was Trump trades, things that went up because they're perceived as going to do well under his administration. There's things that probably didn't do so well, like the green fuel and all the rest of it. So we'll just have to wait and see, and one needs to follow events and anticipate, if that's at all possible with this bloke, as to which way the ball's going to bounce. Yeah,
certainly. I guess then, just before we move to the RBA statement, one of the commenters that I've seen in the last 72 hours or so has referenced the money markets and something we've talked about, which is them pricing in rate cuts next year. And we've made some predictions around where we think that will go now. One of the suggestions was that we were looking at a sum total of a 1% rate cut or cash rate change next year. With this, new result coming through, with the content of the RBA statement and all the factors that are kind of combining at the moment, do you think that we are any chance of seeing anything like a 1% cut next year, or is it still a little bit too early to tell at this stage?
Not on the available evidence. So the available evidence is, as I've just sidestepped, I don't know what Trump's going to do, because he probably doesn't know what he's going to do. But one thing I think most people agree is that Trump will be inflationary. So if you look at his first term, He had policies that were inflationary. Unfortunately for Joe Biden and the Democrats, that inflation exploded on their watch. But Trump policies certainly played their role in all of that. There's absolutely no doubt. So the money markets, after the Melbourne Cup rate decision, had the first interest rate cut priced in for July 2025. After the Trump victory, money markets had the first rate cut fully priced in for August 2025. And if they're only thinking the first rate cut would come in August 2025, it's hard to see that they would cut 4 times if it's 4.25% cuts, and they would only do that if the economy absolutely hit the skids. If I can cut to some of the comments from Michelle Bullock in her statement, I think she was actually more of a catalyst for pushing rate cut expectations back than the Trump victory. We must keep in mind that a few days after Trump's victory, the US Federal Reserve actually cut interest rate.
Yeah.
And it's debatable whether those rate cuts were justified, because I don't know that inflation's completely under control over there, but they're cutting them anyway. But when you come to Australia, if I read some of the comments from Michelle Bullock, she says that part of the decline in the headline inflation number reflects a temporary cost of living relief from governments. Abstracting from these effects, underlying inflation, as represented by the trimmed mean, was 3.5% over the year to the September quarter. This was as forecast, but it's still some way from the 2.5% midpoint of the inflation target. And that's where I think money markets have said that they won't be, the RBA won't be cutting rates now until August on these statements. And then further down in the statement, the RBA said, while headline inflation has declined substantially and will remain lower for a time, underlying inflation is more indicative of inflation momentum, and it remains too high. The November Statement of Monetary Policy forecasts suggest that it will be some time yet before inflation is sustainably in the target range and approaching the midpoint. And this reinforces the need to remain vigilant to upside risks to inflation, and the board is not ruling anything in or out, as is their common statement at the end of these things. So they are expecting inflation, the way I read this, to stay sticky into 2026. The forecast published into the November Statement on Monetary Policy do not see inflation returning sustainably to the midpoint until the target level until 2026. It says that in their statement. So the RBA aren't cutting anytime soon.
Yeah, to be honest, it's really interesting to read this statement and to hear, the underlying concerns they have, because I think it's certainly for many of us, it's very easy to get caught up in the monthly or even quarterly inflation figures and say, well, we're in target now, let's cut and let's move on with our life. But if they're suggesting the underlying inflation, which has the fringes trimmed, is what they're suggesting, they're taking the outliers away to give us a more accurate notional average, then 3.5% is still well above where we need to be. I wonder then, I guess you don't know the answer and they probably don't either, but given what we're expecting over the next few months potentially coming from the US market, it's likely that momentum may stall, or in some cases reverse, in which case that 3.5 underlying inflation may become 3.4 in a quarter, or it may become 4. There's no real way to know at this point, which obviously is completely unreassuring for us and, a little bit concerning or unsettling for me, that's for sure.
Yeah, well, I saw someone obviously questioned Michelle Bullock on the Trump presidency victory and asked her what her thoughts were, and she sidestepped it and said it's too early to tell, and that's the only thing she could say. But it was good on the journalist for asking the question. It will become obvious in time, but if you were a betting person, you would suggest that inflation will have upward pressure, because there is no way that Trump is going to be a fiscal conservative. Some people will like that, don't get me wrong, but the reality is that you could see inflation pushing out across the globe again.
Yeah, it's certainly. I haven't lost or missed the irony that Trump was elected over concerns around inflation, and of course his policies typically are pro-inflationary. I want to get a sense, and I know we have talked about before that the RBA really has two major decisions it has to make every time it meets, and that is how do they balance the war on inflation with unemployment and the jobs market? How do they protect the economy with those one lever that really has two major factors that contribute? Given that in this statement they talk about the fact that unemployment is stable and the jobs market, the labour market's quite strong, and inflation is sticky and slower than expected, do you think there is a point in the next 6, 12, 18 or 24 months to, give it a bit of a time course where Michelle Bullock potentially has to make a very tough decision around rates where everything's kind of holding? The job market's not really changing, but inflation is coming down way too slow or not coming down at all, and has to make a critical decision before there is just economic disaster.
Kind of stagflation there that we've spoken
that
about
we have
in
spoken
the past.
about, exactly, yeah.
And we're all hoping that it doesn't get there, and we're hoping that traditional models work where higher interest rates bring inflation down, and we can do it in a manner where it doesn't cause unemployment to run to painful levels for the economy, and then the world resets itself. But stagflation is when inflation is sticky or above target, and interest rates need to stay elevated to control that inflation. And at the same time, the unemployment rate's trickling up or pushing up, not trickling up, it's a bit hard to trickle up, but pushing up. And the RBA have a very, very uncomfortable decision to make. And they haven't been put in that position yet. But in 2025, they may be, where unemployment is getting to a very, very awkward point, and but inflation's not coming down, and they may be saying we're doing this for your own good, where we're causing people to lose their jobs for the greater good of the economy.
Yeah, we can certainly hope that it doesn't get to that point. But I know that even with our conversation with Todd, our mortgage broker friend, recently, he did mention that people are selling down assets, all the things that we've talked about before, to protect their primary asset, their primary home. But I wonder how long people can keep that going in this current climate. That's for sure. As we move on, then, Peter, let's jump into a bit of a market wrap if we can. I know that we've seen some interesting changes in the property market, and we've talked at length about all of the factors that do contribute. We've also talked about a lot recently the falling or stagnating auction clearance rates based on stock and a whole range of other things. So I'd love to get a sense of what's happening in your mind on the ground. So what's your personal experience of property at the moment across Sydney, and then what's the data sort of telling us, and is it correlating at the moment?
Well, it's really interesting. If you look at CoreLogic's October numbers, they say that Sydney house prices, not apartments, but home prices, fell 0.1%. Not 1%, but 0.1% for the first monthly decline since January 2023. So that suggests a fairly modest downturn, one not to be too concerned about, if you like. What I would say, though, is that on the ground, conditions are very volatile. So you'll run one inspection and you'll have like 20 parties come through, and for all intents and purposes it appears to be a boom. And then you'll show another property and you might be lucky to see 2 parties through. Both properties are undergoing the same marketing campaign, but one's in vogue at the moment and one's not. So no matter what you're trading, whether you're buying or selling, it really is worthwhile coming to understand what the market is doing in the category that you're transacting in, both buying and or selling at the moment, because conditions, while statistically the data suggests it's a fairly muted, boring market, I can assure you on the ground it's anything but boring. It seems to be really hot, or it seems to be really off. Strata title apartments with strata issues, special levies, building problems are the least desirable product in the market, and anything that's expensive in a desirable suburb seems to be well supported at the moment.
Yeah, look, I think that all makes sense, and it certainly aligns with all the information we have given this year, which is that the top end's held well, and the unique or lifestyle apartments are particularly sought after. As we wrap up then today, Peter, I got a question that you aren't going to like, I guess, because you're not a big fan of predictions. But given that we're in a tough property cycle at the moment, or we're in an interesting part of the property cycle. We've just had a pretty resounding election result overseas, which has a whole range of implications. And we are heading into an election cycle here in Australia. I would really love to get your experienced viewpoint of what is going to be important from a campaign perspective for these parties related to property in particular, and what, if any, policy decisions do you think could be made that are going to just benefit the market, more broadly? And, I don't need specifics necessarily, but I wonder, with Trump's victory around the economy's concerns over there, what do Labor and Liberals here really need to address to fix the housing problems we have?
Oh, they'll both come up with their own policies. I just hope we don't see short-sighted policy or incentives that put a Band-Aid solution across the housing crisis to get one party or another through an election. What's really interesting, and I thought about it today when I was showing yet another empty apartment, is the market has a housing crisis at the moment. There's lots of apartments on the market across the city. It's not as though buyers are turning up to have a look at them. Not the federal government, but the state government's policy is to build more apartments. And it's like you are trying to build more product that the public are not interested in. Now, partly the reason they're not interested in them is because they don't want to pay the high strata and cop the poor build quality that some of the apartments around town do, and there's oversaturation. But I think if the government tries to jam a certain style of property down our throats and say this is what's good for you, it'll backfire. And I think the party that comes up with a housing solution that interests the public is the one that'll do best out of it.
Okay. Do you think then, is there any likelihood of seeing major federal policy around, I guess, not housing in terms of supply and demand, which is what the state's trying to address at the moment? I guess what I'm getting at, do you think we're likely to see anything during this campaign around negative gearing, around franking credits, around, those grants that actually provide?
No chance. Look, Albanese got absolutely slaughtered a month ago for that. That guy's punching off the ropes at the moment because he's got two left feet and he just keeps walking into dramas. So there is absolutely no chance that Dutton as a Liberal wouldn't do it, and the Labor Party have tried to do it. And I accept that if you were building a perfect tax system, you wouldn't build negative gearing into it. But to remove it now that it's so entrenched, when it gave them such a black eye in the 2019 election, and they went into that as short price favourites. So for Anthony Albanese trying to rescue the Prime Ministership, to go with such a controversial position, there's no chance that will happen. That is off the table.
Yeah, certainly. I think it's referred to as shortened price favourites, Peter, and in my world, that's for sure. Look, really great discussion today, Peter. It's been an interesting week just across the world, but also in property in Sydney. I know that we've got lots to talk about every week, and I certainly look forward to chatting with you next week.
Thanks, Ciaran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.